Well, fellow option traders, this is Jeff, and this is the market update for Friday, May 20th, 2016. Sort of forgot what I was doing here, I guess. You might say, been busy week, very busy week. Also a nail biter, but I'm happy. Today I'm happy. We'll cover that. All right, so this week, a lot of the announcements were, mixed, some good, some bad. But just nothing, there's nothing overall where everything is looking up. I don't know if that ever happens, but it certainly is not happening now. You know, my bearish bias plays into a lot of what I talk about. And we'll see why I still have a bearish bias. Jobless claims was not a good number. I know that here they're blaming Verizon's strike for this number, or may play into it somehow or another. I don't know how people that are on strike can end up getting unemployment. I thought that you had to be fired or dismissed or something. So I don't think anybody from Verizon has been dismissed, and I do have a little bit of insight into that because my daughter is working strike duty out on Long Island. She is a Verizon employee here in Central Ohio, and her family misses her very much. It's not good for anybody. This strike with, they say 40,000 people, 40,000 communication workers, is not good for them. It's not good for the employees that are taking their place. Everybody's just trying to do what they think is right, and if anybody's listening in that is on either side, either the strikers or the replacement workers, please keep a cool head and just do your job, and let's not go after anybody personally. Starting to experience that as things are getting tougher for those both doing the replacement work and the strikers. She's been gone for a month and a half now, and we'd like to have her back. Okay, so enough said about that. Today, existing home sales came out at 10 o'clock. Not bad. Numbers in line. Month-to-month change there, though, is down quite a bit, but year-to-year change is up. And even though they say that they're measuring construction homes, condominiums, and co-ops, I know that there's a lot of apartment building going on because there's really not many people that can actually afford to buy a home, especially if you're younger and facing college debt. Hey, I'm not promoting free tuition. I'm just saying that college is, in a lot of cases, is very expensive, and I think that a lot of the younger people are kind of forced to go the through advertisements or whatever to go to the expensive colleges instead of community colleges, just to see if they like what they think they want to do. I know that I went to 3 different community colleges in my very young career before I settled on electronics and finished out with that. So, just be patient. I think that that's a pretty good way to go, and it didn't cost a whole heck of a lot, and I paid for it all myself. Of course, that was, 45 years ago? But I think you can still do it today. Okay, enough said about that. What do we normally go to next? Well, let's go take a look and see what's going on here out in the world. Today, market is looking positive, so we have a little bullish bounce here for the end of the week. VIX is at 1550. Gold has been bothering me. I'm going to see here. Let's see if we can figure out what's been bothering me about gold in a minute. Oil's at 48.46, trying desperately to get to that $50 mark. the dollar index itself is at 95, up, looking a little bit stronger lately. Also stronger, or actually weaker here against the euro. So that's sort of a contradictory thing going on here. And the Dow's up, and you remember we had our bear call at 1100 that we've been waiting to get out of, and we did get out of it yesterday, and I was able to buy it back for $2. We'll cover that in a minute. So I have nothing over here as far as an Iron Condor on the rut is concerned right now. Alright, so I was talking about gold. Actually, what I'm going to do, because this chart's already set up, we're just going to take a look at rut and what went on this week. So I closed that position, and I was looking at doing something like this for July expiration on July 11th or somewhere thereabouts. Actually, it's actually 7:15, as this tells you here. Right in that little pop-up box there, it says end at 9:70 on 7:15. But was not able to get into the bear call side of it yesterday, and since the market was moving down, I decided not to put on the bull put side. So we're just going to wait a little while. June expiration is too soon. I like to get at least 45 days out, 45 to 60, so the July expiration fits that. It's just that premium is juiciest, and the decay is not as rapid, or it's just starting to roll over. So that's why I picked 45 to 60 days. So here is where the Iron Condor was, and it actually bailed on the bear call side. We'll take a look at the spreadsheet here. Here's a spreadsheet. This is the bull put side, I'm sorry, that I exited on right down here, this particular row right here, on the 12th. So I got out of that to get rid of the downside risk. And then this is the big one here, which had that short at 1100, the bear call, and got out of that yesterday, and I was able to buy it back for $2. It was kind of late in the day. Pins and needles, man, and a couple days before that I was really sweating it. So let's take a look at why. This is a weekly chart. I'm going to switch over here to a 5-minute, 5-day chart. And this is yesterday. So opened low, and I thought, all right, yeah. And I was watching it, actually sitting here and watching it creep up here, and then it shot back down. So what I was really worried about was the FOMC minutes, and that's when this came out on Wednesday at 2 o'clock. Things came down, and I was afraid they would do the opposite. You just never know what it's going to do. It doesn't matter what they say, you just don't know what the market's going to do. Usually reacts, and here it reacted negatively, and it continued into the next day. And actually on this candle, that's when the order did execute. So even though these prices were lower, we have a rapid decay the day before expiration. So this is decay got this to execute later on in the day for the $2. So happy, because this brought me back up to profitability, and actually made a little bit on this after being down quite a bit here. So plus these two, so that's like $330 more. So this is $23.25, and this is $24.90. Well, we can add these together just to be sure here. Oops. and that's 28.11. So I lost 23.25 and made 28.11 on these 3 trades. So I'm happy about that. All right, so that's where we are. I have a row hidden here, which was the bear call from yesterday. I actually put it in here thinking that it was going to execute, and it didn't. The reason why it did not execute is because market kept going down yesterday. So can I get it to execute today? Yes, I'm sure I probably can, but I'm not going to because it's still climbing. So I'm going to wait until, let's go over to our daily chart here. I'm going to wait until I get a sign, indicator. Momentum is still leaving. Wow, that's pretty amazing. This is a 5-minute chart, I'm sorry. Let's go back to the day. I'm going to wait until I get a hook. So can I do the bull put side? I could have, but I don't really have. I'm a little late on this hook. So it would have been good. Actually, yeah. This is not really too late because how quick can you be? Here's a bounce here, so I could do the bull put side. And let's see what we might have. We'll cover that gold thing in a minute. So on the bull put side, has it changed since yesterday? Down here, I had a 970. So we're looking for a 10 delta. And we're still, we could probably still do 970. It was a $1.40 yesterday. Oh, it's a $1.50. Oh, that's the call side. I'm sorry. It was a $1.55 yesterday. It's $1.20 today. That's an acceptable premium for me for this 20-point spread between the 2 strikes. So that would be acceptable to me. So I could put that order in today. Not sure if I am or not. We'll just see. Let's go back to style daily. Okay. And I want to go back to this chart. So I do have on the weekly, since we're long-term traders, I do have the hook here. I am watching the weekly. That's what I'm mostly interested in. So, I may just do that after I get off of here, or I might do it at the end of the video. I want to go take a look at gold. Everybody always says, and I don't know this to be a fact, but everybody always says when gold is up, the market's down. When the market's down, gold is up. All right, so there is a way to look at that, I think. So let's take a look at /GC versus, what should we look at, S&P? So let's do the futures we'll do /ES, and we'll get rid of our studies here. I don't know if I have a study list style. I don't. So I'm just going to hide these. Hide style studies. Let's see here. I just want to edit the study. Edit. Okay. This study, I want to shut these off. So I'm going to click the little cog over here and say show study. No. Uncheck that box. Click this little clog here. Say nope. And say OK and OK, and the study should disappear. And I really want to go to a line chart. Let's see here, chart mode, standard, monkey bars, chart type, candle. I want to go to a line. Okay, now I want to also hide this thing. Let's see here. Edit study, whole moving average. How did that ever get in there? Take that out. We're getting there, folks. We're getting there. Okay, now go over here and click studies and say edit studies or add study. Add study. I'm going to do, you can't see it down here. It's way down at the bottom. It says compare with. And I'm going to say custom symbol up here. And we want to compare it with /GC. Okay, now purple is GC. And this line, these red and green lines are the S&P 500. Let's go to 10-year monthly. And let's delete all drawings. I don't know which chart it's, yes I do. That was a nice sound, wasn't it? There. Okay. Now, here we have it. This is a monthly picture, and it's going back 10 years. Let's zoom out. So here we had gold tracking and actually beating the S&P 500, and then all of a sudden, boom, this comes along. And it actually is, like I had mentioned, gold is contrary to the market. Funny thing here is when there's the big crash of 2008, it took it a while to respond, and it just, momentum probably carried it up to here, up to 1800. We look at the scale over here for gold, and now we're down to currently 1450 or 1255, I'm sorry. So it is yes and no. I think what I'm doing is micromanaging it. That what I'm seeing here is when the market's up big, sometimes gold is, sometimes it isn't, sometimes it's not down big, you know, it just kind of depends. So I think on a micro level it's not, but apparently it looks like as though on a macro level it is. And since it looks like we might be getting a rollover here, although not quite as severe as it was back here, but it looks like as though there's going to be a rollover here, that gold is coming back and may cross it sometime in the future, provided everything continues going the way that it is. So in my mind, I was always thinking that, you know, you always hear this about manipulating the price of gold. Well, I believe that they probably really are manipulating the price of gold, but sure can't prove it from that chart that I just looked at. It's just a little fishy, and it's not exactly an opposite correlation or a negative correlation, but it definitely does look like pretty much overall, at least over the last 10 years, I guess that story is pretty true, except for, you know, the recent run-up that we've had here during this time frame. But here, this is quite revealing. This was the 10th anniversary of 9/11 right in here, and then things turned around and came back, so there's a pretty big pullback here. Is it the same volume as this pullback here? Well, pretty close. Looks about the same. This one just took a little bit longer. Yeah. Why do I have rut up here? I guess it doesn't probably matter. I have rut up there because I have this linked. I shouldn't have this linked. See this little red thing here? That means it's linked to the little red thing on my chart here. So I'll just unlink that. There. pretty much holds true though, right? Following the S&P pretty much. Am I kind of babbling? Yeah, I'm babbling a little bit. All right, so I mentioned that maybe I might put that order in. So I do it across 3 accounts, so we'll just run that order in here. Go to the Analyze tab, and it says $1.25 for that particular position right now. So I think I'm going to do that. So I right-click and say Create Duplicate Order. That's what I want, and we'll just have it for today. Hit the Confirm and Send. And here I have multiple accounts, so we want to go -1 and -1 and -1 for that $1.20, and we'll see if this goes. Alright, so boom. I also get a text message on my phone if you're hearing that in the background. So that is that. We are in, and let's go to that chart. I want to go back here to RUT, and this is a monthly chart. Let's go to a weekly, or let's go to a daily. No, I want to go to a weekly. And we'll zoom in. So our level here is at, our short is at 970. Right down here, showing us. So there we are, and we got it for $1.25. Now it's worth $1.30. Its market must be pulling back a tad. I don't know, but we got it for $1.25. Is that what it was? Oh, one was. Oh, they're all over the place. I don't like that when it does that. I don't like that. $1.20, $1.20. Filled at $1.20, $1.20. Why does it say $1.23? Let's try to figure this out. Okay, that's an account 3621. Filled this order at this price. Filled this order at this price. Fill this order at this price. So our average, I guess, is $1.21 or so. So that's what we'll put in our spreadsheet on the put side. Okay, so that's it. We're in. And we are at 950. And that's where this level is. Oh, this is at 970. So we'll go to Edit Properties, and we're going to say 950. And that's 7/15, and the date that we got in is today, which is the 20th. We didn't do the 12/10 side yet. We're going to wait to see. So that looks pretty good. That's right about at this previous low here. So if we break this trend line and move up, then we will have a bright future. Provided, of course, that the Federal Reserve and the other people in the government can keep champagne flowing, I guess you might say. Let's go back here and take a look at, this is July. Let's take a look at where we would be now on the call side with the bear call around a 10 delta. That would be here at 1200. So now we would be at 1200 here for our short, and our long would be 1220. And that would only be $1. So if I'm just going to change this. what happened here? 1200, 1220. Oh, I'm looking at the wrong thing here. 1200. 1200. Yep, that's where we'd be. So, change this to 1200. And that's what our profit zone would look like if we condorize this. All right, so I think I accomplished everything today. So thanks everybody very much for watching. Have a great day and enjoy your weekend. But most of all, happy trading.